Welcome to our video series on real estate and getting the great and one. This video series is going to be in two parts. The first one today, we're going to talk about the advantages of real estate and how comparable they are to whole life. And we're going to show how you can get your great and one. In the second one, we're going to do some math and show you a case study to kind of show you the numbers. So let's get started. Now, real estate investing and whole life insurance, the great and one. Real estate investors are already playing this game. What we're going to empower you is how you can play the same game with whole life insurance and get your and one. Now, you may be thinking, well, what does and one mean? Now, and one is in reference to a basketball term. Now in basketball, if you're fouled while you're shooting a free throw, you get what's called an and one. And that is if you made the basket, you get the 2 points or 3 points that you made, and you get an opportunity to shoot one more. And if you make that, you get the original baskets and one more extra. So we're going to show you how you can do that financially. Let's talk about real estate. When you invest in real estate, you do it for many reasons. For one, you have the appreciation. Also, there is equity inside your property. Also, there is cash flow, which I think is very huge. In addition, there are tax advantages, which this is very unique to real estate, especially with my experience of being a CPA. I don't know any other investment that has the tax advantages like real estate. Well, maybe there's one more, and we're going to talk about that here in a second. And with real estate, the tax advantages are that you can get tax deductions while you have the property. And that's in relation to depreciation. So typically in those first few years, the depreciation is so high that you will not have to pay income tax on all of your cash flow. And then when you go to sell it, there's additional tax advantages because the gain on that property, if you've held it for more than a year, is going to be taxed at special rates. Also, real estate is considered a hedge on inflation. And what that means is for example, if you were to have gotten a mortgage on there, you've gotten that based on today's dollars, but you're going to pay those back in the future with weaker dollars after inflation. In addition, as inflation increases, so should your rental income. So this is a great hedge against inflation. Also, you can leverage real estate. And what that means is let's say you had a house that was $100,000, you don't have to put down $100,000. You can leverage it. Maybe you only put down $20,000 and you can still buy that house. Now, in addition, if you have equity in there, you can leverage that out. And what is very cool is that that's not going to affect your appreciation. It's still going to appreciate at the same rate whether you leverage the money or not. So how does this compare to whole life? Well, first, the whole life that we're talking about is a unique way to design it. And that means that it is max funded, cash value focused, whole life insurance. And what that can provide, it also provides appreciation in the form of a death benefit. Your death benefit in whole life is rising each and every year. And I use this kind of like a permission slip. Now, I don't know how it is in your family, but in mine, my wife handles all of the family and runs a household. And all I have to do is run the family business. I would not trade spaces for her for the world. However, if something happened to me, I wouldn't want her to have to do both. What the death benefit will do is it will pay off all of our obligations and still have some money left over to take care of her for the rest of her life. Your policy also has equity. By that, I mean cash value. Your cash value can be used for any reason. You do not need to apply or to prove that you're credit worthy to get the equity out. All you need to do is fill out one form and tell them where to send the check to. Now, with real estate having cash flow is very important because you're always going to need cash, whether that is because there is a vacancy or some repairs, but also you need to take advantage of other opportunities. So you need to store your cash flow so it is liquid. Now, you can also store that liquidity inside your life insurance policy. Now, instead of earning 0% in somebody else's bank, that same cash value can be earning up to 4% and higher inside your policy. Now, the cash value inside your policy, when banks are looking at it, if you're getting a mortgage, they treat it as the same as if it's in a bank or it is inside your policy. Now, life insurance is a very unique tax advantage product. And what that means is that it can be tax-free, meaning the growth inside your policy is tax-free. And when you access money, that is also going to be tax-free. Now, this thing's pretty cool. If you're taking advantage of all of the tax deductions of real estate, and what if after you take those deductions, you put those dollars somewhere that it is earning tax-free? Now you are maximizing the current tax code. Life insurance is also a hedge of inflation because that equity, you can use it today when it's of most value. Your policy also has leverage, and I'm going to go into that in a second. But before I do, I want to make a point on something that your policy has that your real estate doesn't, and that is asset protection. Now, asset protection means if you get sued, they cannot attach the equity inside your policy. Let's say, for example, let's not say you because you're probably the best driver. So let's say your spouse is driving and he or she runs into a school bus and she gets sued or he gets sued from the parents. They can come after all of your unprotected assets, but they cannot come after your life insurance. And in relating to real estate, let's say that your tenant gets hurt or injured, they can sue you. Even if you have an LLC, that may protect your personal assets, but the assets of the LLC are still going to be at risk. But the more money that you have inside your policy, you're going to get complete full protection. Now, every state has a different level of protection. However, in the state that I live in, Nevada, 100% of that equity is protected. And maybe your state, it's that high as well. Now, in regards to leverage, now this is pretty cool. What you can do is instead of putting money directly into real estate, what if you have a policy and you put the money inside your policy, then you get all of the benefits of the policy, and now you can leverage your equity to buy the real estate. Now, not only do you have all the advantages of your policy, but now you have all the advantages of real estate. And this is why we call this the Great and One. With this video, we talked about how you can get the and one when you're investing in real estate. Now watch our next one where we're going to put some math to it and kind of show you the impact that and one asset can have. Now go make it a great day.